As most people are aware, the price of gold has been skyrocketing over the past year. If we look at the performance of GLD, which is the Spider Gold Trust ETF, we can see that gold is currently up more than 40% over the past year, crushing the S&P 500. Since January of 2023, gold has risen almost 100% in value, surpassing most other asset classes with the exception of Bitcoin. This is largely fueled by a lot of economic uncertainty going around right now, with a number of concerning reports recently coming out. People have been worried about tariffs and how they'll negatively impact the economy, as tariffs are known to cause inflation. Then, of course, we just got our very first interest rate cut. This usually only occurs when the Federal Reserve believes that the economy is going to start slowing down. Prices for a lot of consumer goods, including beef and coffee, have been soaring, and fuel prices have also started going up recently. And when the economy becomes more pessimistic, it usually results in a higher demand for gold. Now, this asset isn't known for being appealing to income-focused investors. A gold bar will never pay you a dividend. But the good news is that there's a lot of ETFs out there that track gold prices, with one being GLD as previously shown. And a number of options-based ETFs exist that'll actually pay high distributions based upon the movements of gold prices. It's a less common type of dividend ETF that exists, but interest in these investments has been growing a lot for people who want high dividends. In this Patreon requested video, we're going to take a look at the various high-yielding gold dividend ETFs that exist. For this video, we're only going to look at ETFs that are exposed to gold itself, which usually involves using options on ticker GLD, the Spider Gold Trust. So that means no mining companies and no broad precious metal funds. There are ETFs that are exposed to gold, but they're also exposed to silver, platinum, and also companies involved with the mining and transportation of them. But in this video, we're not going to focus on any of those, just ETFs exposed to gold prices, because mining companies can perform better or worse than metal prices for various reasons. So with that being said, let's go ahead and get started. The first ETF we're going to take a look at is by Simplify, which is their Gold Strategy Plus Income ETF, ticker YGLD. According to its website, it says it seeks capital gains and income. An actively managed ETF, it combines a gold futures strategy with an income generation options overlay. Using futures, the fund aims to produce a 150% exposure to gold. The options overlay will focus on riding short-term spreads on a variety of underlying assets, including equity, fixed income, and commodity indices or ETFs. So using leverage, it buys gold futures, which gives it a 150% exposure to gold prices. YGLD first buys T-bills, which helps support its dividend, and then uses those T-bills to buy the gold futures. This helps stabilize its dividend since these T-bills are still offering a good yield. In my opinion, the best thing about this ETF is that it offers the best share price appreciation when gold prices are rising. It's performed the best out of all the other ETFs we're going to take a look at least when it comes to share price gains. It's also a pretty inexpensive fund when compared to its competitors and also other Simplify funds. But unfortunately, it's also the lowest yielding gold fund. According to their website, its current yield is only 5.84%. It's not terrible, but that share price appreciation is likely worth it to some investors. Its total return for 2025 as of the making of this video is over 62% with dividends reinvested, which is the best out of everything we're going to take a look at. But because it's so leveraged at 150%, it could really fall hard when gold prices come back down. But if you continue to be bullish on gold, and if you're okay with sacrificing a higher yield for more share price appreciation, then YGLD might be the best option for you. We're now going to look at a fund by a company called First Trust. We're now looking at ticker IGLD, which is the FT Vest Gold Strategy Target Income ETF. According to its website, it says, the investment objective of the FT Vest Gold Strategy Target Income ETF is to seek to deliver participation in the price returns of the Spider Gold Trust while providing a consistent level of income. The fund will invest substantially all of its assets in U.S. Treasury securities and in the shares of a wholly owned subsidiary that holds exchange-traded options, including flexible exchange-traded options that reference the performance of the underlying ETF. This fund also pays monthly dividends, unlike the Simplify ETF. What you need to know is that IGLD uses a synthetic covered call strategy to generate its income. This means this ETF doesn't actually own shares of GLD directly, but instead uses options to attempt to replicate its share price movements. It's the same thing that YieldMax and Roundhill are famous for. In our current market environment, where gold has been soaring this year, IGLD hasn't been doing too bad from a share price perspective. Considering it uses a synthetic covered call strategy, the upside still has been decent. It's still greatly capped, but that's the nature of all covered call funds. However, the yield isn't as impressive compared to the YieldMax funds. Seeking Alpha is reporting a really high yield of roughly 16.5%, but this isn't accurate. I calculated the yield off of its last dividend, and it comes out to a little over 7%. This would match what's on its website right now, which is 7.03%. The reason it's so high on Seeking Alpha is because it includes this very large special dividend that was paid at the end of last year, and it was the first time this fund has ever issued a special dividend. So I would not expect this to continue indefinitely. I should also mention that First Trust also has another gold dividend ETF, but this one pays annually, so I'm not going to cover it since that would not appeal to my audience. That fund is ticker BGLD, which is the FT Gold Strategy Quarterly Buffer ETF. Ultimately, I think IGLD is more appealing than the Simplify Fund if you're looking for higher income. The Simplify Fund has offered better returns, but if yield is your priority, then IGLD is the better choice in my opinion. Up next, we've got IAUI, the NEOS Gold High Income ETF. This one is pretty brand new, as it's only been around for 3 months at this point, so there is a limited amount of data that we can look at. But according to its website, it says the fund aims to offer monthly income through a data-driven call option strategy on gold ETPs. ETP stands for Exchange Traded Products. The fund seeks to offer appreciation based on exposure to physical gold, and the fund offers an accessible way to pair physical gold exposure with high monthly income potential within a single ETF. Just like with IGLD, the NEOS fund also uses a synthetic covered call strategy. When we look at its share price performance, IAUI has slightly less price growth than IGLD, but the NEOS fund comes with a substantially higher yield. This ETF offers a yield of well over 12% and it pays monthly dividends. They also tout that IAUI can also be more tax efficient, as index options are classified as Section 1256 contracts. This means that taxes on some of the dividends can be subject to 60% long-term and 40% short-term tax treatment. But again, it's only been around for 3 months, so we don't have a good track record of it yet. I've also been asked about ticker GLDI by UBS. But GLDI is not an ETF, it's an ETN, an exchange-traded note. These are debt investments that act like equity securities. ETNs don't actually own the underlying securities, or ticker GLD in this instance. The institution or bank sponsoring the ETN promises to tie the amount of the investment to an underlying asset and then will pay the investor back the amount the ETN is worth when it matures. They can be pretty risky holdings, as you can see GLDI has experienced really bad share price movements. But it does offer the highest yield at over 16% and it does pay monthly, so I understand why some people ask about this. I personally don't really care for ETNs in general. Some are good, but the majority are very thinly traded. This is likely one of the most popular ETNs that exists, but I personally wouldn't recommend it. So after looking at all the high-yielding gold ETFs that I'm aware of, which one would be the best pick? Although it is the newest fund, the one I'm most excited for is IAUI by NEOS. The yield is the best out of all the ETFs we looked at, but the Simplify fund also appears to be a pretty good consideration if you're more concerned about share price. Honestly, I can't say that any of them are bad. Even IGLD will still do really well if gold continues to rally. Let me know your thoughts and what your favorite is and if you hold any of them. But with that being said, that's going to wrap up today's video. If you'd like to connect with me and see what's inside of my own high-yielding dividend portfolio, then feel free to check me out over on Patreon. You'll be notified when I make trades and you'll get access to our Discord with other high-yielding investors. Thanks again for watching. Please be sure to like this video and subscribe if you want more high-yielding investment content. Thanks again for watching and I hope you all have a great day.